Good afternoon. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Monday, the 27th of April, 2020, 5:15 p.m. Central Time. A big update today, but why not? You know, we went into the weekend understanding that a number of states were going to open up businesses, parts of their factories, whatever it might be, and that is going on. More are going forward. In Illinois, where I live, a judge just struck down the idea of the extension of the shut-in, but we'll see what happens there. It's going to be a legal battle, but everything in Illinois is a legal battle. In any case, an up day. We have earnings starting tomorrow in a number of the tech stocks. That goes through Thursday, 5 big ones. And then we get the oil companies reporting on Friday. They got Chevron and Exxon, so keep your eye on that. I'm not sure I've got the names right, but I think I do. But as we take a look, you can see gold gave back a little bit. The other market that gave back some money today was TLT, which, you know, if you get the risk on and people think things are getting back to normal, do you think interest rates are going to stay this low? And that becomes the questions. Jeff Gundlach came out today and he still thinks that the market's going to retest lows in a number of areas. We'll see. I don't know. That's going to be the question. Here's what I do know. I know what a chart looks like and I know where we're at. This is the tech sector, and I'm marking for you the Fibonacci count to just give us an idea where we're at. This market has crawled all the way back to a 62% retracement. Typically, that is where, if you're going to stay in a bear market, it's about all you do and you roll back down. NASDAQ went through that, so I think NASDAQ will have a very difficult time in going down for new lows. I could be wrong. Maybe the earnings comes out terrible for those companies. I don't know. Remember how heavily people in America are invested in tech companies. So it really impacts a lot of the indices, how they're set up, and of course pocketbooks here. But when we take this and we start looking at the chart, you do have a pattern of higher lows, higher highs. Now that kicked in today. Prior to that we had, and I don't mind showing you this, we didn't have that pattern. We had a higher high and then we had come down, made lower high, lower low. Coming into today, my point is you didn't have that pattern. You reversed today, and when you did it, you set this pattern up with the higher high, higher low, which is bullish. The market is now up to the first resistance point for all purposes. 89.81 is that number. Today's high was 89.69. You're knocking on the door of that. The other number, if you clear that and take off to the upside, 93.02, which is the upper Bollinger Band. So the first resistance is 12 cents higher as I see it. The slow stochastic study, well, as you can see, the market has now got both numbers over 80. If we go back to Friday, both numbers were over 80. They were not that way Thursday. So we have two events tomorrow that could happen. Number one, we can get an embedded reading, but first, you're overbought. Markets typically don't embed, so the pressure's on the market. It was a strong Monday to the upside. Will we get a Tuesday reversal in markets? Another thing you got to think of. That's why I think the pros are going to take some money at the 100-day average. If it embeds on the first break, I think they'll be buying it. What ends this bull run, temporarily at least? Not getting the embedded reading and taking out the lows of Friday, 86.59. When we come to the Van Eck SMH, which is the U.S. Semiconductor 25 Index, again, this is going to be in the spotlight. This is what this week's about. So higher lows, higher highs, again, right into the 100-day average. Today's high, 134.66. That number's 133.91, and we turned back from that today, as you could see, after getting through it. Are we embedded? Well, both numbers today. Let's see if I can get that. There we go. Yep, day 2, day 3. Same setup. You don't have 3 days in a row. You had Friday, get both numbers over 80, and today. You got to get 3 in a row to embed. Tomorrow's going to be the day, and again, that pressure of trying to get 3 in a row. Will it actually set up? When we come to the industrial sector, Spider, in an uptrend, higher lows, higher highs. The number the bulls don't want to see taken out is 60.58. If that's taken out, you neutralize this uptrend. You don't start a bear trend because you've got a higher high. The most you can do as a bear is have a higher high, lower low. No trend setup. XLE, still in an uptrend with today's action. Now, the market had that prior. You had the higher lows right here and higher highs. Today's action's an outside day up. What you don't want to see is the low of an outside day up taken out the next day or the day after that. So Tuesday or Wednesday in plain English. If it is, the odds are very strong the prices will try to get back to the 18-day average. Now, it depends on the way you set this up. You can just fall there and still keep the uptrend. But if you made a higher high tomorrow and then reverse through it, that would change the whole look of the chart and throw it out of that trend. In the QQQ, this has been the strongest of the indices. It still has the pattern. It made it today, and I want to show you this. A lot of these markets up until today didn't have a chart pattern of a higher high, higher low. They had, in this case, lower highs, lower lows. Now on Friday, you went up to 214.30. Didn't take out this high of 214.44. You hit 214.30. Today you took it out. So when you did that, you made the higher lows, higher highs. The one thing I think I said on Friday, well, I would have said it in my daily reports for sure, by my subscriber video. This is the battleground, the 100-day average. The market has elected not to make the 18 or the 200 at this point party to what it's deciding to do. It's decided to hone in on the 100-day, and that's not uncommon. It can happen, especially in markets that are trying to act very strong, and this is an embedded reading one. Are we going to 225.13? If you do, that's where I expect the pros to take money off the table. The first challenge of the Bollinger Band is where I expect to see them lighten up in a big way. In the emerging market ETF, you're overbought. You're basically in sideways action. And I do understand we have the pattern with today's action. We didn't have this till today. But with today, we now have higher lows, higher highs. I'm looking for 57.17, and I expect that to be a real problem in this market. Why? You're already overbought. You're not embedded. The first challenge of a Bollinger Band, if it gets there, that's it. If you take out the lows of Friday, you step out of this uptrend and go back into the churn. Because of the sideways action, I'm expecting this market to just spend its time bumping around, not doing a lot. In the GLD, well, you've got this pattern of a correction low, then you go up, make a high, and you're pulling back. What have I been telling you on this chart? Those that are buying these rallies, it depends obviously where you're stepping in, they're finding that they're under pressure very quickly. I don't know why, can't explain it, but the market's almost screaming at you, hey, if you're going to buy me on a break. And we'll see what happens. Your momentum is trying to turn down. You're not trending. The bias is up. I just don't see anything there. As I said last week, and I'm still saying, GDX is stronger than GLD. It's got a pattern, though, of a lower low, a higher high. It too is difficult, but what's ruling the chart isn't the pattern. It's the fact that momentum locked in bullish, and until this red line gets back to 80 or under, be cautious in terms of don't get short. This market can work higher to that Bollinger Band. It's already hit it once. Then it backed off as I expected. Now what is next in store for it? TLT has rolled over to the downside. The market is now bearish. Lower highs, lower lows, settlement under the 18-day average, momentum turned down. Bears took control of it. The question is, will this market in a basic sideways pattern here in the Bollinger Band allow itself to get back to the lower band? It certainly could. I would not expect follow through though. So I'm looking to see if the market from right here gets further down, and we'll see how the pros want to handle that. I think they're short at this point. FXE. Trend down, lower highs, lower lows, oversold market, trying to get a bit of a bounce in itself right here. The resistance is going to be 102.73, let's call it. The problem is you're so oversold, what's the edge in going short? So when I put it all together, I look at it and I go to myself, okay, what do you do with that? And that's why I say second guessing. Sometimes you go like that and you say, what should I be doing here? Well, that's where I want to come in. I want to help you with your confidence in charting. There's not always something to do. That's the first thing to understand. When there is something to do, it's how do you recognize it? How do you know where to go in? What kind of stops do you put in? What would you look at? What I'm doing is I put out a video in the